Day, and I wanted to make this small SMC tutorial, kind of a informational video on market structure and just some tips and tricks on market structure, how to identify market structure, what pairs you can potentially trade with market structure. So for example, UJ moves slower with market structure, Swiss franc moves slower, Australia moves slower, and there are actually a specific set of pairs in the Forex market, or if you trade futures, that correlate and move differently and have different market structures. So that's why sometimes it may seem hard for you to apply the right market structure on the right thing. But yeah, guys, so let's get right into it. So if you guys know me, I'm only looking at pairs. Well, basically, I always check the economic calendar before I even look at the charts, because the economic calendar shows me who's in control of the market and who's going to move the market, so I can potentially find setups. So this pair I'm looking at is Euro CAD, and the only reason I'm looking at Euro CAD is because of the euro currency moving in the first place. So if we look at this economic calendar right here, we can see that medium impact and high impact. So on medium impact, the pairs that are moving is the US dollar, GBP, AU, and CAD. And also those other currencies I don't trade, so I'm not even focused on them. But since those are the pairs that are actually moving, I'm going to focus on trading those pairs. And I'm going to focus on looking for setups that I could potentially get into that are these pairs. So like, for example, the pair you're looking at right now is Euro CAD. And so since this is Euro CAD, the first thing I want to do to look for a trade is market structures. That's my first step, right? So I already kind of did that. I went on the 1 hour on Euro CAD, and I noticed that it was bullish. And you're looking at that bearish thing, that's on a smaller time frame. The reason it's bullish is because if you zoom all the way out, knowing me, my rules, that's how we find market structure. Because if we zoom all the way in, it's going to show us market structure that's irrelevant. Because if we zoom in, it looks like the trend is going, it could be going down, up, and yes, this still counts as the trend right here, guys, what you're looking at. This small trend under my face, that is a bullish trend, but if we zoom out, we can actually see the significant trend that's irrelevant and shows us and gives us actual structure. So what I mean by that is I zoom all the way out to show me the relevant highs and lows that consist market structure, and then after I do that, I move price action all the way to the left. What the hell? Is it still recording? Yeah, it's still recording. I think, sorry guys, my camera thing just shut off, but that's okay, we're gonna still go. Yeah, so we go back to the thing. On the 1 hour, I take price action and I put it all the way to the left, and once I do that, then I can identify my current highs and lows that maintain market structure. So we have this, which is our current high, we have our current low here, and we have our previous high and our previous low, giving us 4 pieces of market structure total. Now, once I get this and I understand that my market, and I understand that the market structure and the trend is bullish, then what I'm actually going to do is I'm going to zoom all the way into a smaller time frame so I can find, I'm going to zoom all the way into a smaller time frame so I can actually find another set of structure so I can actually get into a trade. So right now we're on the 5-minute structure. We established that on the 1 hour we are going to be bullish, because if you look on the 1 hour, price currently live is where I'm pointing to now. This area right here, price currently is towards this low of our trend. So this is our current high, all-time high, and this is our all-time low down here. Our current price is closer to the all-time low, which means that if this trend as a whole is bullish, I want to be buying low towards the mid-range, because that's where prices, if you look at the scale here, are cheaper, because that's how smart money trading works. The smart money buys low and they sell high for the most profit. And so technically, between our current all-time high and low, if we take a little tool here and I draw and I divide our current high and low in half, price, like I said, is below this blue line, which means we're in the discount area. Discount areas are where prices are cheap, right? And we're at the low. Premium areas above the blue line are where prices are expensive. Right now, prices hasn't reached this level yet, so we are currently where prices are cheap, which is why this gives us an idea of what we should be doing, which is buying. So I'm going to go to the 5-minute and I'm going to zoom in, and if we zoom in and then we zoom all the way out, we can see that structure is bullish. That's why I have that little tag there, right? And now that I know structure is bullish, because of the fact that we have our current high, current low, previous low, previous high, and we're forming new highs and we're forming higher lows, which means we're in a bullish trend, I can look for potential fair value gaps and order blocks, because those are the only two types of setups that I actually trade. And let me see if I can get the camera back on, guys. Hold on. I'm gonna see if I can get the I was trying to experiment with this new camera recorder, and it was just being really weird. So I'm actually gonna turn this back on, and your camera will only be visible on pages within the Chrome browser. Yeah, that's fine. Allow. Sorry about this. Let me just. All right, you see, yeah, now my face is back. Oh shit, what did I do, guys? Fuck. Oh my fucking god, what the fuck did I do? All right, yeah, sorry, never mind. I pressed something on my phone and it was acting up. Yeah, if you guys want to skip this, go ahead and skip this. I don't really edit my videos anymore, so you're gonna have to bear with me a little bit. All right, there we go. Cool. All right, so let's just start recording on here. Whatever. I hope it doesn't fuck up my video. I hope it doesn't fuck. Okay, it's not fucking up the video. All right, I'm recording 2 videos at once. That's why it's doing that. But yeah, guys, let's get back into the video. So, like I was saying before, we're currently bullish, and I only trade 2 types of trade setups. I trade fair value gaps and I trade order blocks. So what those look like, actually, I'll just show you guys. I have a free Discord, by the way. If you guys want to join, it's free. No one has to pay to join. It's free. I do have paid services, but this is one of my free services where I let all of my community come, and basically I created this group for like-minded traders to come together and share their ideas, or traders that just want to gain more value from me that have been on my YouTube channel. So I don't know why the fucking camera isn't recording. It's being a piece of shit, but don't worry about it, guys. Just ignore it and let the camera just do that. But yeah, so there it is. All right, so it's working. If we're now looking in my Discord, and I'm actually about to show you guys an example of the 2 types of trade setups that I trade, which are order blocks and fair value gaps. So the order blocks, you guys can look at that. Yeah, this is a step-by-step thing I gave for the group, which is free. It's free information. Here it is, guys. So this is one out of the many setups that I trade for all my trades. So it looks like this. So this is what is called an order block. So I know it's kind of hard to see, but basically, this is when my charts were black and white. So an order block is basically there are 2 engulfing candles, and not always engulfing, but they're 2 large candles that inject sums of money into the market to control the direction one way or another. So they are 2 large blocks filled with large sums of capital, hence why they're called order blocks. And those order blocks are, like I said, they're large blocks filled with large amounts of capital in positions that cause the market to push up or down because of the fact that they're filled with large amounts of orders and large capital. Because if you know the markets, whoever has the most capital moves the market. So if I had $1 million or $1 billion and I pressed buy in any market, it's going to visually on the screen and on the chart show that someone is buying at that price level. And that's how smart money works. So smart money, like I say in every video, the nickname comes from the people that are in control of the market, so like the whales. Smart money refers to the whales, it refers to the banks, institutions, and in Forex terms, it refers to the banks and institutions and the hedge funds. And in Bitcoin and everything else in the crypto and in futures, it just refers to the people that have the most money. The same thing to institutions, because institutions also own Bitcoin and trade Bitcoin, Forex, futures. But yeah, so that's why I actually trade them. And a lot of times these order blocks can be viewed as footprints that smart money has, indicators / footprints that smart money has been in the market, right? And because of that, I get in on the correction, because an order block, like I said, it starts off with large sums of capital pushing the market in one direction, and the market can't just go straight up. Markets have to retrace before going and continuing that trend. So all I'm doing to make money, and all I do in my strategy, is I simply get in on the retracements before the market continues in that direction. And the only reason I know it's going to continue in the direction is because of the fact that I'm trading an order block or a fair value gap, or I'm trading with smart money. And I've gotten so good to the point where I can actually spot and tell just by looking at a screen with minimal, nothing on it, and I can clearly just see by price action who is in control of the market. Is supply or is demand in control? And yeah, guys, I don't like making my videos too long, because I want you to actually learn something and take home with it and just go and learn one thing, because if you overload your brain, you're not going to learn anything. So yeah, first step is market structure. Use the 1 hour time frame, and the 4 hour time frame is for your long-term trend. I always use the 4 hour time frame for my long-term trend, and also for finding major fair value gaps and major supply and demand zones. So 4 hours for the long term, 1 hour for the short term, 30 minutes for the short term, and I enter my trades on the 15 minute, usually in the 5 minute. But yeah, guys, I'm gonna end the video here. It's been 12 minutes. I know it's kind of been all over the place, but yeah, guys, this is my video. If you want to watch more, I upload videos every day. I have a free Discord. Yeah, guys, peace.